Hello everyone and welcome to another Elliott Wave Forecast weekly technical video update. This time around we're going to try to give you guys an overall view of what the market should be doing for this coming week. The week that starts on August the 26th, and it's going to be the last week of the month. For that, we're going to start here with the S&P 500, which we believe that most likely is going to be ending a cycle sometime next week. The same scenario can be seen all around the market, and consequently we gotta be ready for a big cycle. Technically should be ending next week. Okay, so what I'm going to try to do now is I'm going to try to explain to you guys and put some examples so you guys can be ready for this coming week. The S&P 500 in the short time frames right here, we believe is ending, is correcting the cycle that started here. This is the weekly chart on July 25th. That can be seen all around the market. That's the cycle that has been corrected in Aussie, in CAD, in CAD Yen, in Aussie Yen, in New Zealand. All those indices which are related, they are correcting that cycle. After that correction ends, all of these indices should make a marginal new high to a levels, and then from there is going to be a correction that we still do not have defined. Looking at the index, how deep it's going to be, we don't know if it's going to correct the cycle from 6.4 or it's going to correct the cycle from October 31st. Either way, we believe that after 3 weeks back and another high, the S&P is going to end at least the cycle from 604. This high should happens to be around 1447, and then minimum weakness to around 1374 we can see again. Technically that's what we like, but also we can see that the S&P after this high can correct lower and going all the way back to 1280. We don't know yet, and we have to go step by step. But looking at the S&P in a small time frame, this is what we are expecting. We are expecting this cycle that started here on July 25th, ended, and we are correcting that cycle. After that, we're going to see another rally increase that is going to take the S&P to around 1440, 1450 before the S&P pull back. All right, that's very clear. I mean, it's very clear right there on the market, and consequently I want to show you this, how every single index in the risk world, look, the Dow Jones right there, same chart as the S&P. You see the green ones. Let me put a color there so you guys do not get confused. You see the red one, we are expecting the scene in the Dow Jones. It keep pushing higher right there before the top is created. Look at the DAX. The decline in the DAX also has been corrective, and again correcting the same cycle, the cycle from July 25th. So it's very clear that we are entering, or we are already, basically we were entering last week. You guys can review last week video that we were forecasting that the risk trade is going to correct the cycle from July 25th. Now we believe that most likely we're going to end the correction sometime this week before the last rally in risk take place. Now the US dollar here, it did in our system, a very significant move this week. The US dollar, in other words, in our system confirmed that this is a three-way cycle. Now, that cycle that started, as you guys see here also, on July 25th, should be coming to the end, most likely by the end of the month. In other words, around the end of the month, August 31st to September the 3rd, we should start seeing a recovery in the dollar. And the dollar most likely is going to recover in this path in 3 weeks to around 83 area before continues to go lower. But we got to play the dollar smart. What we believe with that is that we know that the trend so far is in 5 ways. This week we downgrade the dollar's trend to only the weekly bullish. Everywhere else we are bearish the dollar. But right here, most likely the 4-hour trend in the US dollar is going to become a buy. In other words, it's going to become bullish. That area when we should find this temporary low in the dollar is between 80.32, 81.09, from where someplace in between we should see a rally in the dollar. Now, looking at the 4-hour chart, which you guys are going to see here in the US dollar, is very simple. The 4-hour chart, this is what we are expecting, and we should expect between 80.68, 81, this rally in the dollar, and consequently, we need to be ready for it, all right? We need to be ready for that rally, because this can be a powerful rally in the dollar that can take the dollar, let's say, from here all the way to 84.40, even to 82.40, even to 82.80 before downtrend renew again. So everyone needs to be ready. The way that we're going to know it is we're going to use the same system we always use, which is the RSI system. And for now, for us, I mean, the dollar should do this and push it, I mean, another load here in the RSI to confirm A, B, C, a connector, A, a B, and we should push lower. When this B wave is marked right here, what's going to happen is that when the recovery break that wave right there, we're going to upgrade or change the 4-hour chart, the 4-hour trend in the dollar for a sell to a buy the dip. All right, so it's very clear all around the market. Of course, we're going to go very deep tomorrow when it comes to the seminar. But for today, nothing technically had changed that we are expecting. I mean, from that nothing technically had changed in our view over the weekend ahead, or the weekend update. Now, let's take a look at some individual pairs pretty fast. On the individual basics, I mean, technically, nothing really had changed on the market. Still, we are expecting the euro dollar to drop early in this week, most likely to an area around 124, 124.40, from where we should see a rally, and this is the peak that we are expecting. That peak is due to happen, according to the time-fever relationship, around the areas around these dates. I mean, like I say, the last August 31st to September the 3rd, when a most significant top in the euro is going to happen, and according to our system, it's going to do another pullback to around 25 before going higher. But remember, the weekly trend in the euro still is to the downside. This scenario is completely possible here when it comes to the euro dollar. And like I'm showing that, remember, the trend is still to the downside in the euro. The euro has a target around 107, 114. In either way, this is a triangle or it is a double zigzag. No matter what it is, the euro has a downside trend. So be aware of that. Talking about downside trends and the Euro group, again, we want to mention to you guys on the daily, the Euro Yen, which it has, and it was our fear over the last 3 or 4 weeks that this scenario was the one playing out, and technically, most likely doing the overlay of the charge, this is what is playing out. When this pair right here can be set, look at the divergence on the last low, and it broke this high already even when the market has known. So that's extremely bullish in our system. And technically this pair has a target, as we have mentioned to many of you guys, of this area 105. So be careful, guys, honestly, with the short risk trade. And we need to be able to play that. We should be able to play the swings in the appropriate way. Another thing that it came out of the weekly update is in reference to the New Zealand dollar. Look, guys, the New Zealand dollar here is very interesting. I'm going to open the New Zealand dollar. I'm going to take the opportunity here to present this to you guys. And I'm going to open also the S&P 500 in the weekly chart. I know that many chartering and many talk has been around the market in reference to the S&P and the 2008 5-way move. And I'm going to take this opportunity to look at this. This is the S&P 500 right here. And the S&P 500, we always been showing the count that this is a possibility, that this is an A and this is a B. Nobody wants to listen to it when we say that this can be a huge flat. Look at the chart of the S&P saying 1971. If you take a look here, this is the biggest correction in the middle. This correction went almost to the 50% back of, and almost to the 618 of the correction. So this, honestly, this can be A and B, and this is correcting and in 3 ways. Let's put it up, and this can be the beginning of the new outtrend. Now, this day here is March 31st, 2000. This peak is, everybody knows already, September 21, 2007, and the bottom is around March 2009. The thing is that the S&P did 5 ways here. But if you take a look at the New Zealand dollar, look, it did a more similar structure here. Very similar structure. And New Zealand was the only pair that it did 5 ways within the financial crisis, together with the S&P in that group. So New Zealand already took the high, which makes me to believe that most likely the path that the S&P 500 is going to follow, it is something like this. And I was telling Daoud about it today, no denying the possibility that there was a flat, and no denying the possibility that the S&P is going to go over here, and then it's going to correct the whole cycle, go back to around 1,000, and continues to go higher. I know that that's not popular. I know that people do not want to listen to it, but that's a reality. But well, that's something that came out of the weekly update, and we want to share that to you guys. If you take a look at the Aussie in the weekly, it's also set for a huge decline after a new high. And technically, but this is corrective, and this can also create the new high in the S&P. So in general, guys, for the beginning of the week, what we like is that we believe that the cycles that started around July 21st, or in the case of the risk trades, cycle that started at the beginning of June, in the case of the metals and the indices, cycle like an Aussie, like this one that started here, it give us enough room to believe that in general a huge cycle increase should be coming onto the end within the next 10 days. When this Aussie trade gets here to this B and this peak, I mean, we believe that is when the dollar is going to get to around 80.60 and 81.09, and it's going to be a confluence right there into the risk trade, and the most bigger top can be created and risk before, and then we're going to be taking the decline with, I mean, with very precaution weight and trading it smart. For example, in the euro, we believe that around that time also a cycle is going to be created. And honestly, I recommend everyone to sell here, because remember the weekly trend is in favor of the dollar, all right, as of right now. So that's what we got for next week, and I hope you guys enjoyed the video.